Hello traders, hello all of the followers of my YouTube channel. Thank you very much for following and subscribing on my video about the information regarding the truth of the trading. Last video I mentioned about trading by indicators and trading by price action. As we all know that you cannot last for long when you are trading by an indicator. So now I will start teaching you uh, a little bit part of the price action, okay, which is this is also very important in any kind of time frame, financial instruments, any kind of trader. If you are a forex trader, options trader, if you are a stock trader, doesn't matter. Yes, as long as you believe that uh, this can give you a freedom for the future, then you have to stick to it. Yes, if you are a forex trader, then stick to it. Options trader, stick to it. Yes, for every kind of things that you study, there is always an advantage. So right now, I will not explain further my introduction. So we will do and find a fake breakout, okay? Because many of the traders, when they see that the price touches the major key level, they will start action. They will trade long or they will trade short. They will trade higher and lower. It will not work, okay, always. It will not work what you expected. So what is I have to explain to you how to identify and how to avoid false breakouts. Yes, breakouts is what we call is breakouts gives you uh, always a wish when you try to make a profit, because breakouts, it doesn't happen over and over again. Okay, sometimes after 30 days the market is raging. Okay, so first we will use two indicators. Okay, actually we will use only one indicator to determine, okay, that there will be what we call a sure or a confirmed uh, breakout. So we will use the moving average which I used before my previous video. So we will use a moving average. You will find out here. You will set to period of 200, yes, and exponential moving average. And let's put it color blue so it is lighter. So right there, the first thing that you should do as a price action trader is you have to first identify the market condition. Always remember that you have to identify the market condition. Okay, what is the tip of identifying a false breakout? You can easily identify false breakout during the ranging or consolidating market, because when the trend is strong, the sentiment of the candles or the price action still follows the trend. Okay, so it is less impossible of the breakout. Okay, when you are on the major uptrend, as you can see here, the sentiment is it will goes back to the exponential moving average and it will continue the trend because the trend is strong. Okay, it's the same like with the downtrend. Okay, it will go down. It will follow the trend. Okay, so if you are a trend follower, then you can use that strategy. But if you're a price action trader, you must observe, okay, where is the fake breakout happening? Fake breakouts happening more often during ranging market, okay, because ranging market normally, after the ranging market or consolidation phase, there will be a breakout, which is upper, which is lower. Okay, as you can see here, okay, how can you identify? First, you have to look for the moving average. If the moving average is like this, you are on the what we call is uptrend. Okay, you are on the uptrend because you see, as I plot, you see you are on the up slope and the price is above price is above the blue line or the exponential moving average. This is the key. When the prices is above the exponential moving average, you are on the trending market or uptrend. And when the price is in between, or what we call is on crossing on the exponential moving average, which is, as we can draw, the moving average is flat like a board, you are on the ranging market. And when the moving average and the price is below the blue, you are on the downtrend. So this kind of feature is easy to remember and understand when it comes to identifying the market condition. So on this case, we already found three trends. We have the uptrend, we have the ranging market, and we have the downtrend. So first I have to clear this one because we already found the market condition. Now, how can you, what will you start? First, you have to, the first thing you found the market condition. The second thing is that, as you remember, we have to plot the support and resistance level. Okay, so find the higher highs and higher lows. So as you can see right here, okay, right here we have a resistance level. Why? Because right here it touches the blue line, it touches here, 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 okay, most likely, and it touches here, cannot, then goes down, it touches here. Okay, so as we observe, right here, it touches again, and right here. So we can conclude, okay, that this is a resistance level. Because plotting a support and resistance when you're a beginner needs to practice. Because if you are already an experienced trader, you will see it on your naked eye in an instant. Then you can plot it immediately. You have to practice plotting support and resistance level because this is the second step. This is the second criteria. So right here we can put a resistance level, yes, a support level. So touches here, okay, and it touches here multiple times, cannot break, so strong. Let's put it up so that, yes, right there, or right there on the, guys, when you are plotting the support and resistance, you have to plot it at the closing price, not on the wicks, at the closing price, okay, at the closing price. Then when you plot again on the wick, this is what we call a support area. From the wick going to the closing price is the support area, okay. But if you don't want to confuse, then you have to plot it on the closing price always, because this is the area where the prices bounce. Okay, so we have to clear it again. Okay, we have to clear it again. Okay, so now we have to plot the ranging market. Okay, so right here we have a ranging market. You have already found the market condition, which is ranging, and you have already plotted the support and resistance level. Okay, so now you have the ranging market, you have plotted the support and resistance level. Now what you have to find? You have to find a breakout. Okay, you have to find a breakout. So as you can see right here, the moving average start changing down. Okay, and the price start changing below the moving averages. And you see, there is a candle breaks the support level. This is a support level. He breaks it. Then what happened? What happened to majority of the traders? Yes, majority of the traders, after they see this candle breaks, okay, they will put immediately the trade. Okay, they will put immediately the trade down. Yes, and when they put the stop loss right here, then they will lose. They will lose because they put the stop loss very early. Yeah, so they will put their trade right here because there is a breakout, and they will put the stop loss above or right here on the resistance level. Yes, it's correct also, but you see what happens to the candle? He retests the line, because this is a new what? This is a new resistance level. Okay? So this concept, I always explain, do not put your trade immediately, but rather you have to wait the price, you have to wait the price to goes back, okay? Goes back to the major key level or the new resistance level. So what happened to the candle? It goes, it goes up and retest. So this is the time for you to trade because this is considered now a major key level because there is two testing. There is a testing from above and there is a testing from below. So this is a strong level. So you can put now your stop loss if you are a forex trader right here. When this is breaks above, then it cuts your loss. Then you can take profit. You can take profit. Let's move this from here. You put the trade going down. You see the ratio? It's very big ratio. Your risk is less and your profit is big. So this kind of strategy is more often good for forex traders. Okay? So now, as I mentioned a while ago, when you are on the ranging market, there will be a breakout. It's either an uptrend or it's either a new downtrend or a new uptrend. So what happened now? To the candle, as you can see, after touching the major key level, the candle goes down is with the strength, okay? Because you see, almost all of the candles, almost 15 candles, how many? This 3, 6, 9, almost 10 candles, okay, goes down because you understand the concept. And now it continues, goes down. As you can see, it's very, very strong, yeah? It goes very, very strong. This works, yeah? From here, you see, it goes down, okay? It goes down, yeah? So where you have to put your stop loss? Put your stop loss here, what I said, okay? Above the major key level. You see, you can take your profit right here. You see how the opportunity is given to you by the market. It's very wide. You see the distance? The distance of your profit is like this and your risk is right there. Okay? This is a fake breakout. Do not be fooled. Okay? Do not be fooled or do not be dismayed. Do not be get excited. Okay? Do not get excited when your girlfriend answers your letter or your crush answered your messenger text or messenger message. But you have to inspect, yeah? You have to ask for intention for the girl. This is the same like the market. You have to wait for the opportunity that this will happen. It doesn't happen, leave the market. It is good that you don't take profit rather than you have a losing trade because you are maintaining your capital. Okay? You understand the concept? We found the ranging market. We plot the support and resistance level. And after that, we wait for the testing. Okay? After testing, then we put the trade. You see? Now we will find again another opportunity which I have to explain to you again how to identify a false breakout. Okay? A false breakout which is you can see on the ranging market. You can see this on the ranging market. So right here we have, okay, you see right here, the prices dancing on the exponential moving average. So you are considered on the ranging market, okay? You are considered on the ranging market. So we will plot the support and resistance level, okay? We can say that this is a support and resistance level right here, okay? Because it touches, yes, it touches, okay? So another support level is here, okay? Or let's say on the closing price, okay? On the closing price, okay? So right here, let's see there. So right now you are on the ranging market. What happens to the market? There is a false breakout again right here, okay? Okay, now the traders Now the traders, they do, what they do is they put immediately. But no, guys, we have to find the retest. So the next candle is the red candle, which tests the new support level. Okay? Which tests the new support level. And you have to follow that. Okay? You have to follow that. Okay? So what happened to the market? What happened to the market is that when you put the stop loss here, okay, because you expect that after this will goes up. When you put the stop loss here and put your trade right here, so it will cut your loss here. Okay, it will cut your loss here because what happened is that this is not a new uptrend. This is not a new uptrend. That's why it doesn't respect what is the price action. Okay, so it still goes down. Then you have to accept that. Yes. In the forex, in the trading, it is not always winning, guys. The most important in the trading is that you control your risk. If you put your stop loss here because you don't expect that it will goes down, but there is a red candle breaks, so you are already stopping your loss there. This is the trading. Yes, you have to accept losses. Okay. Then what happened? What happened? It goes back again. It goes back again. Then after there is a fake breakout. Okay. You see? You see? It breaks the support level, and there is a testing. Yes. And there is a testing. You have to wait the test first. You have to wait the test first and plot the stop loss. Okay. You have to plot above. Okay. You have to plot it above, guys. Above. Okay. So right there. Okay. So it goes up. Okay. It goes up, and what happened? What happened after retesting? Okay. So guys, you have to plot. Be careful for this one. You have to plot your stop loss above the closing price of the candle, which is the candlestick testing, or the candle that is used for test. So what is the candle used for test? Is this green Marabuzo candle. You have to put your stop loss above this Marabuzo candle because you will see, you see, okay, you see, it tests the new resistance level. This is a new resistance level coming from there, and he breaks. After that, put you don't put right there exactly on the resistance or the major key level. No, put it above, or the closing price, above the closing price, or exactly at the closing price. This is the closing price of the candle which tests the new resistance level, or the new major key level. Put it there, or put it above. Okay, put it there. Also, you have two stop loss. Okay, above or exact. So in this case, you are lessen your risk, and after that, take your profit. Okay, you have to take your profit. Okay, below. You see? So now, how can you determine your take profit? Guys, you have to remember again, we have to use this Fibonacci line. Okay, so you are a downtrend. So from the top going down. Okay, so from the top going down. So where is the highest level? Okay, where is the highest level? So let's see. Okay, let's see. This is the highest level that we can obtain. Okay, that we can obtain. Okay, so right there. Okay, so I think it's kind of messy, but I will have to explain to you a simple way. Okay, in a simple way, I have to explain to you where to find. Okay, where to find your take profit. Okay, so we will remove this one. So, uh, okay, so you start your trade here going down. So you can take your profit on the resistance or the support level. So right here, so right here, you have a support level here, then you have to wait the price to go down. Right here, then take profit. You see, you have less risk. You are risking risk than you are taking profit. Long, okay? Very, very big opportunity. This is how you play casino, or this is how casino plays. They always win. They always win at the end of the game because they are always on the favor. You must trade like this. You have to always risk less and you have to gain more. Okay? So I hope you understand what I am saying about false breakout. Do not be fooled or do not be dismayed by this one. Do not be surprised why this is happening. I'm following the trend, I'm following the support resistance, but no. Okay? Breakout always or most likely have a retesting. But if the market is very strong, like you found the false breakout on the trending market, it will not test. But in the ranging market, you see, I explained the first condition on the right side and the second condition on the left side. They put a test. They retest it. Okay? So guys, you have to remember the concept. I am not using any indicator, only the one exponential moving average to identify the trend. And I hope guys, you must be like this, that do not depend your trading on the indicator. So thank you very much. Keep liking and subscribing my videos.